Just want to quick check whether my voice is clear or not. Okay, so I think it's still a bit early. How about we give around maybe around three minutes before we start our session tonight. Hello, testing. Okay, I think our 3 minutes is up. Okay, let me make a full screen. All right, so good evening, everyone. Thank you for taking your time to join our webinar tonight. Our webinar is Beginner Investing Blueprints, the easiest way to grow your money into 26. Right, my name is Shazwan. I'm a senior dealer at Philip Capital Sdn Bhd. Okay, so before we start our webinar tonight, a bit of disclaimer. Right, this slide itself has not been reviewed by SC. So any information or any suggestion that I will make is for sharing knowledge purpose only. It does not constitute any financial or investment advice. As you all may aware, investment and trading itself have their own risks. So you are advised to do your own research and do your own judgment. Right, so before we start tonight, I will share a bit about Philip Capital Sdn Bhd. Alright, Philip Capital was incorporated on 7 October 1995. We are wholly owned subsidiaries of Philip Capital Holdings Sdn Bhd. Formerly, we were known as Philip Futures Sdn Bhd. We are also a trading participant of Bursa Malaysia Derivative Berhad and a participating organisation of Bursa Malaysia Securities Berhad. We are also a holder of Capital Market Service License. Alright, so our headquarters or HQ is actually in Kuala Lumpur. But we have 11 Philip Investor Centers or PIC across Malaysia. This is to help our client have easier access to our offices lah. So like for example, myself, I'm from PIC Melaka. Okay, we are also a champion in Bursa Excellence Award in 2024. We are a champion of Best Retail Derivative Trading Participant and also the second runner-up of Best Overall Derivative Trading Participant. Okay, we also have branches outside of Malaysia, such as in the United States, United Kingdom, Singapore, Japan, Australia. Okay, and our product, we also cover both local and foreign. For example, we also cover products from the US market, the UK market, the European market, the Hong Kong market, the Japan market, Singapore market, and also Australia market, not just Malaysia market. Okay, one-stop solution for your trading strategy. Okay, so why Philip is your one-stop solution for your trading? Because we offer three main products, which are futures, equities or stock, and contract for difference or CFD. And all three of our products, we offer both local and foreign. All right, so why Philip is your broker of choice? Number one, we are award-winning multi-asset broker. We also offer 24 hours broking and execution support to our client. We also offer advisory services, and we also offer to our client the latest market news and wide arrays of product. And best of all, we do not charge any platform fees to our client. Okay, so if, for example, if you are new and you don't know where to start, right, you can also request free one-on-one coaching to any branches or any dealers that are close to you lah. So you can request for maybe introduction to future CFD or maybe stock trading. You can also request for product knowledge, platform coaching, and also our charting system lah. So this one you can just request, and the broker or the dealer closest to you will contact you and set the one-on-one coaching lah. Okay, not only that, we also offer weekly market calls. Right, so we also have market views and updates every Monday 11 a.m. and also live counter technical analysis every Monday at 8 p.m. Okay, this is for our upcoming seminar webinar. You can scan the QR code or you guys can take a picture. Usually we will update our website lah, the following month's seminar webinar that we will conduct. Okay. Alright, so this is for online account opening. So right now we are trying to reduce physical account opening. So most of our account opening is done through online. So you guys can take a picture or scan the QR code. Okay. Okay, next I'll share to you all our trading platforms that we are offer. Okay, first for futures product, right? Our platform that we offer is actually Philip Nova. Okay, you guys can scan the QR code for demo account, but unfortunately, our demo account we do not offer paper trading. It's only for platform familiarization only. So even the data is not live lah. It's just for familiarization on the platform only. Right. So in Nova we have over 90 technical indicators. You can buy and sell directly from the chart itself. We have market depth trading tools, and in the platform you can see both local and foreign product in one platform lah. And we also have our Nova AI trading assistant. Right, not only that, the charting in Nova is actually powered by TradingView. So if you're familiar with TradingView, right, if you have using TradingView platform before, you can you can see the familiar setup on both platform. And you can also link your Philip Nova account to TradingView to execute order in TradingView itself. But just a heads up, in order for you to trade in TradingView, right, you actually need to subscribe TradingView, because TradingView is a third-party platform, so you actually need to subscribe TradingView first lah, and also need to subscribe the live data. And unfortunately, if you trade in TradingView, right, you cannot change the currency because in TradingView, the currency will show only in USD, not in MYR. So if you trade Malaysia product like maybe CPO or FKLI, it will be a bit tricky lah because it will show in USD, not in MYR. Right, so if you're trading stocks, the platform that we offer are the Powerms Global. You have all-in-one watch list, charting indicator, and we also offer the top 30 movers of every exchange that we offer to our client. It's a powerful stock analytics, and we also offer market depth to our client. Okay, so right now we are currently promoting invest in US share and ETF with a minimum of USD 3.99 or 0.02%. During the promotion, you will have free US live market data, no platform custody fees, and weekly market costs. Right, so if you're trading CFD, right, you will use Philip CFD Trader. User friendly, live charting, price alert, live market price mirroring exchange, and advanced order type. Okay, sorry guys. Right, so now I will share a bit about our current promotion that we are conducting. Right, first we have a margin financing with global market campaign. It's 6% per annum for the first 6 months and 6.0 thereafter. 0% rollover, stamp duty reimbursement, and free access to global market, and also RM100 touch and go onboarding reward. Right, so we actually the first, I think right now still one of the only offer share financing for global market. Usually, other broker will offer for local market only, but we offer for both local and global market. The period is between 1st September 2025 until 28th February 2026. You guys can scan or take a picture if you guys want to learn more. Okay, alright. So our second promotion is drive your BNB trades further with Philip. Right, so if you open one futures account and skip one trade on BNB product, you are entitled RM50 trading credits. Okay, the prizes or the grand prizes for the lucky draw will be Prodo Myvi, RM 10,000 trading credits, iPhone, Samsung TV, iPad, and more. Right, this promotion will be held until 31st March 2025. Sorry, this one is 31st March 2026. Supposed to be 2026. Sorry, guys. Right, so if you this one actually, if you open an account with us and you start trading, if your brokerage per month is more than 500, you can entitle one ticket lah. So the lucky draw will be held in April, but we will confirm the date later on. But it will be held on April lah. Right, so if you guys want more, you can take a picture or scan the QR code. Okay, so now let's get to the main topic for tonight. All right, so first agenda is investing basics. Okay, so why should you invest in 2026? Okay, why actually you doing nothing right is actually more risky. Right, first because inflation eats your money. Okay, prices of goods actually go up every year. Even if you kept money in saving, you're actually losing buying power over time. And second is rising cost of living. As you, I think most of you already aware, right? Food, petrol, rent, education, even our healthcare is also getting more expensive year by year. Okay, so market recovery opportunities. Okay, market move in cycle. Long-term investor benefit by starting early. And number four is key mindset shift. Okay, your mindset your money must grow faster than your expenses. If your expenses actually growing much faster than your income, you'll be facing trouble later on. Okay, so what is investing? Right, investing actually means putting your money into assets like stocks or ETF, so it can grow over time instead of just keeping it in your savings account. So how your money grows? All right, so if you invest in stock, maybe ETF, right, one of the ways is actually when price increase or the value of the stock increase or the value of the ETF increase. So actually your holding power or your portfolio actually increase as well. This is what we call capital growth. Also, if you're holding stocks that are stable and offer dividend every year, so you can actually receive dividend from the stock that you're holding as well. So if you receive the dividend, then you invest back the dividend you receive into the market, right? So usually increasing the value of your portfolio itself. So that's why it will compound over time. Right. So for example, you save 5,000 in a bank. Okay, value still the same, almost the same lah. If you stay 5,000 in your saving account. But if you invest 5,000 and earn 8% per year, right? So maybe in your first you will gain 5,400, and in 5 years time is 7,000. In 10 years time around 10,000. This one if you keep compounding means you do not. If you gain money, you do not withdraw the profit lah. You keep compounding into the market. Okay, investing helps you money works for you over the long term. This is a key point. Okay, so what is stock for those maybe first time joining or first time hearing what is actually stock, right? Okay, buying a stock means you actually owning a piece of a company. Let's say you currently you see that our main bank is starting to stable, or maybe you see it will start to grow. So then you say, okay, I want to join the Maybank growth. So one of the way you do is actually you own a piece of the company, and by owning it means you're actually buying a share of the company. But even if you buy a small portion, right? If you're holding the company shares, actually you are one of the shareholders. So means you're actually one of the holders of the company itself, right? So when the company grows, your investment also grows. Let's say if the Maybank is actually growing every year, right? So people will start to believe in Maybank. So when people start believing, the value of the share itself will increase because people are believing and people seeing that Maybank is actually growing year on year. Then Maybank is one of the I think it's one of the consistently dividend paid company in Malaysia. So every year you will receive at least one dividend from Maybank itself. So dividend when you cycle back or when you compound back into the share, right? So you're actually growing your portfolio, right? But just I think this one I need to say first lah. But just keep in mind for dividend, right? Company is not compulsory to pay you dividend. So means if you hold a share, right? So the company is not entitled to pay you every quarter or every month dividend to you, right? The payout dividend is depending on the company. So maybe you're holding, maybe this year the company doesn't want to pay, even though they make profit. So but they are not entitled to pay every time. All right. So that's why it's better if you look at the history of the company whether they constantly giving dividend to their shareholder or not. Right. You benefit. What? How do you benefit from stock? Is actually from price increase and from dividend itself. Right. So for simple example of shares, we have Maybank, TNB, Apple, and Tesla. One of the biggest company in the world. So why do stock prices move? Okay, stock prices change because of company performance, like I said before. Let's see, maybe every quarter the company is growing. So when the company is growing, so the price will reflect it as well. Right? Maybe news announcement, maybe the company just have a merger or maybe just acquire a new company or maybe expanding their business and economic condition and also investor demands. Because if more people believe the company will grow stronger in the future, right? So the demand for buying the company is there. So they will also push the price to go up. Right. So just a simple idea. Okay, good news equals more buyers equals price goes up. Bad news equals more sellers equals price goes down. Okay, so previously we talked about stocks, right? Now let's talk about ETF or exchange traded funds. I think, yeah, sorry everyone. Right. So I think maybe someone have heard of ETF before, maybe you haven't. Right. ETF is exchange traded fund. In Malaysia, ETF is not that popular lah, but in the US market, ETF is one of the most popular products. Right. So ETF, why is ETF actually? All right. ETF is a basket of stock. It's a collection of many stocks combined into one shares. So if you, for example, if you're holding one ETF, right, it's instant diversification. Means by buying one ETF, you actually own a small portion of hundreds of companies within the ETF itself. And ETF is like stock. It's traded like stock. You can buy and sell directly from the stock exchange like any other stocks. Right. Example of ETF is the S&P 500 ETF. In the S&P 500 ETF, it includes the global giants such as Apple, Microsoft, and Amazon, which itself representing the top 500 biggest company in the US. Right, so the keynote is one ETF equals to instant diversification, simple, affordable, and smart. Right, so why ETFs are perfect for beginners? Right, so firstly, because ETFs is low cost, low maintenance, you don't need to pick individual stock, or you don't need to spend time in researching each individual stock. You're actually buying a whole market itself. And it's diverse. Number two is diversified portfolio. One ETF can spread your risk across dozens of others companies. Means, for example, if you buy only one ETF, right? So you don't have to worry if one company is not doing good, then maybe just one company is doing good because it's instant diversification. right? So it's number three is easy to buy and sell. ETF trades on stock exchange just like any other stock, simple and flexible. Number four is great for busy people, perfect if you have limited time or capital, but still wants long-term growth. So you don't have to spend much time on researching each and any one of the stocks lah. Right, so buying one S&P 500 ETF means you're indirectly investing in 500 top US companies itself. Right, so type of ETF you can invest in. First, we have the index ETF. This ETF track a broad market index like the S&P 500 or the Bursa Malaysia KSCI. Example is SPDR, S&P 500 ETF or SPY, or my ETF Dow Jones. Then we also have ETF that's based on sectors. Means it's focused on one specific industry such as technology, energy or healthcare. Like for example, Invesco QQQ is the tech industry, XLE is the energy, XLV is healthcare. We also have dividends for ETFs lah. Means invest companies that pay consistent dividends for regular income. Example is Vanguard Dividend Precision ETF or VIG. Right, so probably the example you should know. Right, so the SP500 ETF, the market is US market. Example in the companies in the ETF is Apple, Microsoft, Amazon. Then QQQ is the US tech lah. Means Nvidia, Meta, and Tesla. Most of it is related to AI lah. So if you're seeing that the AI market is still growing, still have demand, right? So you can actually buy the QQQ ETF lah. So this one is more focused on the tech sector only, not the whole market, just the tech center only. Then we have Mighty Dow Jones Islamic Market, it was Malaysia. We have Petronas, SMW, and Bank in it. Okay, ETF give you exposure to powerful brand industry all in one trades. Right, so the difference between stock and ETF, right? Okay, so first is the risk category. Right, for stock is higher because you only depend on one company. For example, if the company suddenly announce that their quarter is not doing good, right? So the risk for the price to drop is much higher lah. But if you buy the ETF, right, it's lower because it's diversified. Means, for example, you have 100 companies in there. Even if one or two companies doing bad, right, you have another 98 companies to cover it. Right, for return for potentials, for stock is higher but much more volatile because in one company, right, of course the return will be much higher, but also the risk will be much greater lah, much more volatile. But ETF will be steadier and long-term growth. Right, so for stock is suitable for investor willing to do research. I mean, if you have time or you're already familiar with the company itself, right? So better you can directly buy the stock because you believe that the company is still in a growing phase. Means you will believe in 5 years time it will still be in a uptrend. But for ETF, it's suitable for beginners and long-term investors because maybe you don't have enough time or maybe you're busy with your work, right? So that's why it's better for you to own an ETF lah. It's a diversification. Right, so example of stock is Maybank, TNB, Apple, and Tesla. And example for ETF is the S&P 500 ETF, KSCI ETF, and STI ETF. Alright, so becoming a smart beginner investor. Okay, there's two ways to invest. First is lump sum. What is lump sum? After that means you have, for example, okay, you have 10,000, right? So you straight buy everything 10,000 in one price. So this is lump sum. It means you invest all your money at once. It's suitable if you have extra or spare cash and the market price is very attractive. But the risk is timing the market only. That means, for example, you look at a specific product, right? Either it's stock or ETF, right? You see that I think it's a good buy right now. So you lump sum, you all in 10,000 into that one price or maybe one two price, right? But the risk is maybe the market wants to do correction first before going up. So that's the risk carries if you do lump sum lah. And the second way is the dollar cost averaging or DCA. This one is beginner friendly lah. It's much more suitable for those who started to invest. Right. This one means you invest in a fixed amount regularly, either weekly or monthly. Like for example, you buy, you have 10,000 worth, 10,000 extra cash lah. You have, then you want to do dollar cost averaging. Means you don't want to buy all in one at that time. So you can maybe you buy every 500 for 1 month. So every month you will buy 500 until you reach the 10,000 extra cash you have. Okay, so why beginners love this? Because it's less stress, because you don't put all your money one time. I don't need to time the market. Means you don't have to look for specific area or specific zone and say this will be the best price to buy. Okay, and also small the price up and down. Even if the price is going down, right? You can because you do this here, right? Actually, your average price will also goes down. So it's easier for your eyes lah. Actually, seeing that the loss is not that big lah. Okay, you also build disciplines automatically because every month you already preset. I want to spend how much, on the exact time, right? So time in the market versus timing the market. All right. So timing the market is kind of hard because you're actually trying to buy at the lowest price and you want to sell at the highest price. It's very stressful because you will not, how to say, you will not be sure either you buy is confirmed the lowest. Sometimes you buy, then will go lower. Then you take profit at high, then it will go higher. So it's easy to make mistakes there because you timing the market. You want to make sure I enter at the lowest possible price and I want to sell at the highest possible price. This one even professional will get it wrong because the market can do whatever they want. Even if to you you read this is the lowest price in history, right? You can still break it and make a new low. But the time in the market is you invest constantly over time. Means you the price is actually secondary lah. So you don't care whether I want to buy at the lowest possible because you buy every month. So you're actually following the market's movement. Okay, so means if the market is going down, you're actually buying until the price goes down. Or if the market goes up, you're actually buying when the market goes up. Because you're actually timing the market. You say the time in the market is not that long. Because not sorry, not that short because you think I want to invest and I want to put my money in the market for 10 years time. So just follow the market movement lah. So it will let the compounding do the work. It's less stressful and more disciplined and proven to work for beginners lah. Because you're not looking for the best price. You're just following what the market is doing. Okay, so risk profile. So before you start any investing or trading, right? First you must make sure you know what type of investor you are. Okay, so everyone invests differently lah. You have your own risk profile. So you need to know your risk profile to help choose which investment suited for you lah. Means for example, you have three simple investors lah, the conservative, the balance, and the growth. Right. For conservative investor, right, they prefer safety and stability. They're comfortable with slower growth, less emotional. This one is best suited for ETF, dividend stock, long-term holdings. Means they do not like the sudden movement in the market. They like when they buy into the market, they're thinking 10 years time, not 1 month from now. They think 10 years from now. That's what conservative investor is. And for balanced investor, they want growth but still value stabilities. This one actually the risk tolerance is higher compared to conservative because they want growth, but at the same time they want to make sure that the growth or the risk is not that high lah. So this one sorry. So the one is best suited for mix of ETF and quality stocks. Then one is the growth investor. They focus on long-term growth, comfortable with high volatility means I don't I even if the markets fall down, I still believe the stock will recover and go later on. So this one is suited for growth stock lah. US ETF long-term investing means you want I I how do I say I'm willing to accept the risk as long as the return is equal value lah. So there is no best start. The best investor is one who match the investing with their comfort, with their risk comfort. Sorry. So means you need to make sure you're aware what type of investor you are. For example, if you are if you're a conservative investor, right, you prefer I want something that is safe. I want to make sure my money is there. No matter what happened, the money is still there. But then suddenly you invest in those growth stock, those sudden growth stock, right? So when the market or when the stock itself doesn't follow what you want, right, you will become very stressful. That's why first you must make sure you understand which type of investor you are. Okay. All right. So how to choose your first investment, right? Beginner investment checklist. When choosing your first stock or ETF, make sure you keep it simple lah. First, you understand the business. Means you can explain what it does in one sentence. Mean you know what the company is doing. You know what's their business plan. You know how they operate. You are aware what the company is doing lah. Then second, you must make sure the performance or the P&L of the company is stable. Okay, look for company of fund with constant result, not wild price swings. Means every year there shows okay maybe 5% growth, 6% growth. Not companies that this year show 20% growth, then next year show negative 30%, then suddenly show another positive 40%. I do not look for companies that the swing is very high. Look for stable company. Stable means every year they show constant growth, not too big growth and not too big loss. Maybe 5% growth, then maybe next year suddenly drop a bit to 3%. But the growth is within a acceptable range lah, not that high lah. Then number three is low fees. Okay, high fees will eat your return, especially important for long-term investing. Then number four is diversify. Avoid putting your money into one company or one sector. For example, if you have 10,000, right, you believe maybe you believe in the finance sector, right? So you put everything in the finance sector. So when the finance sector crash, right, so all your fund you will also crash. So better you diversify portfolio. Do not put everything like the saying goes, do not put all your eggs in one basket lah. Then long term strength. Ask yourself, will this be relevant in 10 years from now? Make sure you understand the business lah. Make sure whether the business will stay relevant or not in the long term. Right, so the blueprint itself, three ready-made beginner portfolios that you can follow or you can practice. Right, the beginner investing blueprint. Right, not all beginners are the same. That's why we use three simple model portfolios lah. Each portfolio matches a different risk level, designed to be easy, practical, and beginner friendly. Uses a mix of stocks and ETFs, help you invest with confidence instead of just guessing. Okay, then you can choose the portfolio that fits you, not what others are doing. Right, so the three beginner portfolio, number one is conservative, is focused on safety and stability. Number two is balance, it mix of growth and stability. And number three is growth, it's higher potential but higher ups and higher downs lah. Okay, so let's go for portfolio number one first, the conservative blueprint. So who is this for? This is for beginners who wants to start safely and steady growth. So how it works? Okay, you put 70% in ETF. Because why 70% ETF? Because it's broader market exposure. So means broader diversify of the portfolio lah. Means the risk of the drawdown is minimized because you're actually buying the whole market, not just specific one company. Then 30% you can go to dividend stock. So this one you make sure you buy stock that will, how to say, constantly pays dividend to their shareholders. You can look for their dividend history lah. How many or whether they have skipped any dividend payout before. So why portfolio number one is good? It's because it's less volatility. Because your 70% you actually exposed to the ETF so much, so the moment will not be that huge lah. So it's more more predictable returns, and it's actually ideal for first time investor. Means you're starting, right? So because you're starting, you're still not sure what you want, right? So better you start with something that is at least the risk is low lah, and the growth is steady. Okay, so example of ETF that you can look is for the broad market ETF lah, that measure Singapore, US, or bond or dividend focus ETF lah. Please make sure you buy the whole market like the S&P 500 ETF lah, that specific ETF. Okay, so this is portfolio number one. Right, so portfolio number two is balanced blueprint. Okay, so who is this suitable for? Sorry guys. Okay, so who is this suitable for? Right, so it's for beginners who want growth but also want stability. Means I want a growing portfolio, but not that it can crash any moment or something like that. So the portfolio allocation will be 50-50 lah. So 50% in ETF, So at least you will have a safety of half of your fund in the broad market exposure. So it reduces through diversification. So even if for example, one company announce I'm not doing good the following quarter or the following year, right? But we also have other companies to support it. So half of your fund will be in a safety, how to say, safety growth lah. And then another 50% you can go to individual or quality stocks lah, like the big chip, like the blue chip stock. And maybe in Malaysia you can go for Maybank, you can go for Public Bank, because I know our financial is one of the highest and one of the most consistent paying dividend companies lah. So you can make 50-50 portfolio lah. One is for safety, make sure it's safe, it doesn't have any high frequency. Then the other you can focus on individual quality stocks lah. So why this way? Because it balances out safety and growth. It's less volatile than an all stock portfolio. It's suitable for investors with medium risk tolerance. That means I can accept the risk, but I don't accept too high of a risk. But I can still accept a risk. So this is portfolio number 2, which is balance blueprint. Alright, so portfolio number 3 is growth blueprint. So this one, who is it suited for? Usually this will be suited for young beginners with a long-term mindset. Means, for example, you stay young, maybe you're in early 30s. 30s, not that young. Maybe you're in early 20s, right? So you just started your job. So you started to think, okay, I want to put my saving money to something that can grow in maybe 10, 30 years in time, right? So that's why this portfolio will be more suitable for you because you still have the time to risk a bit. You still have a time to accept the risk. So how it works is 60% US ETF because US is one of the is the highest company, our biggest company in the world, right? The stock market. So if you put 60% there, right? So with your vision, okay, I want to put in the strongest company in the world and I want to grow with the company itself. So you will wait maybe 5, 10 years, 20 years, and then you can gain the profit later, because you still at early stage of your career. You still have the risk of time lah. Actually, you still have a longer period of time compared to those already in their 30s, 40s, or maybe already married, right? So the money will become much more scarce lah compared to younger people. Then 40% you could put in the growth stock. Means you can put in individual company that is showing higher growth. Maybe company that still, like right now, one of the most still going 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 up companies is companies related to AI lah. So maybe you can start unlike you buy ETF, right? You buy the specific company. So maybe you buy Nvidia itself, you buy Microsoft, you buy Apple. So this one is more suitable for those who are younger and just started their career because they have the risk of time lah, because the time is much longer compared to older generation lah. So why many beginners like this? Because it's focused on long-term wealth building. But make sure this one, make sure you don't how do I say, don't put money then you take out, then you put back in, you take out. Make sure what you're investing is right, the money that you are willing to lose. Because if you are not willing to look, for example, right, so every month you have 1,000, so you put 1,000 in the account every month, right? So make sure the 1,000 you are willing to lose maybe half of it, or maybe, because if your mindset is you don't want to lose any money, right? So you cannot put in a growth blueprint now, because the risk is much higher compared to conservative portfolio number 1. So make sure the fund that you are putting in the market is to fund that I'm willing to lose it, because no matter what, the total loss that I will receive is only the amount of money I put in the market. For example, okay, you put every month, for example, let's say 1,000, right? Then your portfolio is already 10,000. For example, you put 10 months straight, so you have 10,000. Then you say to yourself, okay, I'm willing to lose this 10,000 only. So make sure you will not For example, suddenly the market drop a bit, right? Then maybe your portfolio goes to 9,000 or maybe 8,000, right? Then you withdraw. Then you see the market going up back, then you buy back. So yeah, so make sure to avoid that lah. Because make sure once you're in the market, right? Make sure your mindset is I'm willing to lose what is in the market. Okay. This one, if you guys don't quite understand, you can ask, put in the question box lah. I will try to help to explain later lah if you guys have any question. Right. So why many begins like this? Because focus on long-term wealth building. It take advantage of global growth trends. It best for those who can stay invested and ignore short-term noise lah. So how to select ETF for your portfolio? Okay, when choosing an ETF, right? Don't just chase the hype lah. Make sure you have a bit of checklist out. At least you know why you want to buy the ETF itself. Right. So number one is low expense ratio. Lower fees means more of your returns stay with you over time. uh, s- Sorry. Right. So good liquidity. Make sure the ETF you're buying is have have volume lah. So it's easier for you to get out of the market if you want to get out of the market, and make sure you're easier to enter the market. Then strong index quality. Choose ETF that tracks well known means it tracks maybe the S&P 500, maybe Dow Jones. You know those relevant indices lah. Not those suddenly you never heard of before. Then you buy the ETF. Then proven track record. Prefer that they have survived different market cycle over many years lah. This one better you look at the history of the ETF lah, whether they follow the market or not. Alright, so simple rules. Boring ETFs plus long-term holdings equal powerful results. Right. So then how to select your stocks for your portfolio, right? All right. So this is simple stock checklist. Right. So make sure the stock that you want to buy have strong and consistent profit lah. Means every year, or sorry, or maybe every quarter, the profit is growing. Even if it's not big, right? Maybe around 2 or 1%, but the profit is growing. Even if it's not growing, right? Maybe drop, maybe 1 or 2% only. Don't look for a company that's this year I grew 30%, then next year I drop 40%, then I grow another 50%. I do not try to avoid this type of company because you can see that the growth is not consistent. Then make sure the company has a stable cash flow. Means the business can survive even in bad times or even in good times. And low debt levels, less risk during economic downturns, and also good management, proven leaders with clear strategy and positive long-term trend. So means you look at the company is actually or growing year by year. Not just hype suddenly goes up, then they become irrelevant. Try to avoid that type of company lah. Right. So beginner tip: start with quality companies you understand. Make sure you buy a company that you actually understand what they are doing. That's why I like to give example like Maybank, because I think most Malaysian will know what is Maybank lah. Right. So this will be our avoiding beginners traps. This is what you need to avoid lah. Right, so first, common beginner mistake. This one you confirm you must avoid, must try to avoid. So many beginners lose money not because of market, but because of mistakes. So avoid this trap. First, chasing hype. Do not just buy because everyone's talking about it. This one is especially hard if you like to spend your time on Facebook or something like that. Because usually Facebook they will tell the hype story lah. So, but if for example they're saying, oh, this company they will get a contract for this, let's say for this project. So you read it, you also believe it, right? Okay, so wow, so means in next month the price will move lah. So you actually buying without even doing any research, without even knowing what the company actually does, right? So try to avoid chasing the hype lah. Then also over trading, buying and selling to autumn. This one especially true if you're starting, right? So when you start, right, you will have a feeling of, let's say, of a scared feeling lah, that you will lose your money. This one is very common because, for example, right, okay, you buy, the price is, let's say, 1 ringgit, then it dropped to 95 cents, then you cut loss, right? Then okay, the price goes back up to 1 ringgit 2 cents, then you enter back the market, then it goes back down. So try to avoid entering the market too frequently. Even if you have a stop loss, right, make sure the stop loss is not too too close that you have to enter and exit the market very frequently. Make sure you know where at the price level you say I'm wrong, I want to get out. And even if you get out right, do not enter back. So usually for my client, right, I will ask them if you are trading, this is if you are trading lah. Alright, so for example, if you already cut two times in a day, right? Then close the PC already. Because right, for example, you already lost two times in a day. So right now, right, your emotion is already haywire. So your decision making will be very flustered. So usually this is why I always advise to my client, if you lost two times already in a day, close your laptop. Do not look at the market anymore. Because if you look at the market, right, you would tend to do over trading. You would tend to do reverse trading because you want to prove to yourself I can still make money in the market. So then from two position it become five position, it become 10 position. Then the brokerage also increase because you're actually over trading. So try to avoid that lah. Means if you're wrong, you are wrong. Accept it and move on. Do not try to revenge the market. Okay. All right. So number three, buying cheap stock. All right. So this one also this one usually I saw for most beginner because they like to look for very cheap stock. Let's say in Malaysia, right? I will not disclose any name lah, any stock name lah. So let's say the stock traded at 8 cent. All right. So at 8 cent, right? They buy the stock. They believe if it goes to 10 cents, right, it's already 35% return. Okay. So try to avoid this type of stock because in order for the 8 cents to go to 10 cents, it's not easy. And the volume is very, very big. It's not something that can move in a day. And plus, if you're looking for this type of stock, right? So you already know if the company shares is 8 cents, right? You already reflect and the price already reflect how is the company doing already. For sure, if you look at their P&L, right, confirm they are in a loss. So try to avoid the cheap stock lah, because cheap price is not equal to company. Okay. Right. Number four, no plan. Means you're investing, but you don't actually know what your goals is, what actually you want. You just go because everyone invests, so I invest as well. So make sure you know what you want. Then emotional decision, fear and greed rule portfolio. This one is why I said I have the rules for my client because if you already lost two times, right? So you will not make a decision based on your brain lah. You actually will make a decision based on emotion because you want to prove I can still make money. So that's why I usually said if two times you're wrong in a day, just close the laptop or close the PC already. Enjoy the sunset or something like that. Right? Okay, so a key note is successful investing is boring, calm, and consistent. Alright, so now for red flags of bad investment. Sorry, guys. Right, so some investment look attractive on the surface but carry hidden risks. Okay, beginners should be extra careful with this warning sign. Number one, too good to be true. Okay, promises of guaranteed returns or very price perfect usually unrealistic and risky. This one, please, I really hope you guys take note of this. If you guys meet any, let's say investor lah, any investor or any trader in Facebook or maybe in Telegram, they says to you, give me 300, I will give you 10,000 in 3 hours. Please do not believe them. This one I can confirm with you is a scam already. If they say to you, I can guarantee give you, confirm scam already. Because in investing or in trading itself, there is nothing guarantee about it. Plus, usually I will say if he can make 300 into 10,000 within 3 hours, why he wants your 300? If he can make 10,000 within 3 hours, better he find his own 300 and make 10,000 lah. Why he wants your money? So if you find this in Facebook or maybe Telegram, someone promote to you, right? If you see the word guaranteed and very fast profit, right? Usually it's a scam. Not usually, it will be a scam because it's too good to be true. Because you will take a moment and think, if you can make 300 to 10,000, why should I give him 300? If he can make 10,000 already, there's no reason for him to take your money if he can make 10,000 within 3 hours. Okay, all right. Okay, so number two, no real business model. The company doesn't clearly explain how it makes money and relies on hype and speculation only. Number three, sudden price spike. Okay, sharp price jump without any news, right? Maybe suddenly you saw a stock suddenly goes up 20%, but there's no announcement. Means the profit is not increasing. There's no development of new product or no services. Then there's also no news of of the company getting new project. So these are usually drive by rumors only, and it's usually short term live lah. And number four is high volatility with no reason. Price suddenly move wildly up and down, but the fundamental doesn't show any. Maybe the profit is still the same, doesn't show any increase in profit or drop in profit. So it become very dangerous for beginners because they are not aware of what the fundamental is actually showing to them lah. They just look at the price and they see, this one I think is good, but when you look at fundamental, there's nothing there. So if the if the price fluctuation, if the price fluctuation is high but no reason in it, try to avoid this type of stocks lah. Okay, so why most beginners fail? Okay, the real reason it's not because of market. First, no guidance, because usually beginners they will only rely on friends, social media, and guesses lah. Then they also do not track their portfolio. Means they, even if they buy or sell, right, they don't keep a note of why they buy, why they sell. They just in out, in out, in out. So this one better you have. Usually I will advise them to have a trading journal lah. So at least you know, okay, why you enter this stock at this price at this time. So why you cut this stock at this price at this time. At least you know what. So when you do it frequently, right? So you actually aware, okay, what is your decision? Why you make that decision lah? What influenced you to make that decision? Right. So number three, no risk management. Right. So putting too much money to one and hoping for the best means I'm not sure what I want, but I want money, so I put 10,000 in one stock. Try to avoid that lah. Make sure you do your own research. At least you are aware what you are doing. Okay. So any Q&A from you guys? Yeah, let me check. So if any Q&A, you can just put at the question box. How to put stop loss ATM? This one is C Haram. All right. Hello, C Haram. So how to put stop loss for ETF stock? All right. There's no defined way of how to put. Let's say, okay, if your if your if your portfolio, right, even for ETF stock, right, for long term usually you will use 20% lah. Means if the loss reach 20%, right, usually means you're already wrong lah. Usually people will do 20% or maybe 6 months. Mean within 6 months, right, the price doesn't move. Means it's 1 or 2% just there, right, in 6 months. Then you can try to look for other companies or other ETF that are more suitable for you. But usually for stop loss, for long term, we use around 20% lah. So if you lost this 20%, actually you already do something wrong. That's why better if you starting, right, better you use the dollar cost averaging lah. At least in order for you to reach the 20%, it's not that quick lah. Okay. Uh, any more question, guys? I just start investing in futures also, but I don't know where to start. Sorry, I cannot see your full one. Sorry. Okay, sorry. All right, where to start? I know what I got. What's the strategy? All right. So, if you unsure, right? Okay. So this one, for few because ETF is actually I fall under stock account. So you can open two account with us lah. One is futures account. One is stock account. If you want to trade for transaction fees, right? It depends on the product itself. Because we don't have one fee for all lah. Means for example, even you open futures account with us, right? For example, if you trade FCBO, the rate is different. If you trade FKRI, the rate is also different. So it depends on what product you wanna. But this one, we can get in contact with you after this lah. No worries on that. Gold ETF is good or not? This one, gold ETF. Unfortunately, sir, we do not offer gold ETF lah. We only offer ETF for stock only. Means for the stock market only. If gold, you usually we not usually we offer gold for futures only. So if you want to invest in gold, we only offer futures gold lah. Because ETF, if I'm not mistaken, we do not offer gold ETF lah. Sorry, this one, Cherry Wong. If I open account with Philip Capital, is there insurance for the funds I put in? What do you mean insurance? Means you already we steal money or what? What do you mean by insurance? I know this is under SC practice, right? For any fund or any broking house, right? If you put fund in the broking house, right, we actually have a segregated account. Okay, so actually the account will not be directly into the platform lah. It will be segregated differently. This one is to make sure the fund is not, for example, it's not like we take your money or something like that. And for each fund that come in, right, can only comes out to your account only. Means the account must be in your name only. We do not have any third party withdrawal or anything like that. Only your name. Even for example, someone let's say lah, someone steal your signature or something, right? The fund will go to your bank account only. It will not go to a third party bank account. I hope I answered that one. May I know when I open the account for which open may I know how many direct open account futures and ETF? This one actually you need to open both account as Sherry. One is for futures and one for ETF. Can you suggest some measures stock invest in? Usually, right, if you want to invest, right. So if you want to invest, usually I will advise them to look for stock. This blue chip lah, because you want to invest. You don't want to trade. So usually you look for stock that is already well past its time lah. It's still growing, it's still there. So make sure even if the market crash, right, the company will still be there because you want to invest. How to select stock right price to buy? For for price to buy, for stock usually I will advise look for usually it's the big 30. I do not look for any company that below 50 cents, something like that. If because you want to invest, you want something safe. For right price to buy, this one usually my advice is you look okay, you already know the stock you want to buy, right? So you look at the chart, the price chart. Usually I will advise my client to buy when price is near the support lah. At least let's say if the market goes against you, right, at least your cut loss will be below support. Okay, do not try to buy stock that's already at resistance, already at high, because the cut loss will be very big in order for it to find support. I know what's the name of the account. So yeah, I know. I know what is the name for the account. For futures is futures account, and ETF. It will fall under our stock account lah. For ETF, it will fall under our stock account. Okay, guys, if you guys have any other question, let me share. Okay, you guys can. This one is for online account opening. Okay, so this guy, this one, yeah. Okay, you guys can take a picture if you want to join our Telegram. Okay, this is if you want to call me, this is Malacca phone number. So you guys can take this picture. If you have any question, you can contact the branches near you guys lah. Okay, guys. So sorry, but the time is already up. I hope I will answer your question, and if anything, please you can contact us. No worries. So once again, thank you everyone. I hope I can follow up with you later on. Okay, so I hope wait, you guys already take a picture, right? Alright, so if anything, please feel free to call us. No worries. Okay, thank you everyone. Have a good night. Yes, yes, wait, just one moment. This one is for a company, lah. But this one is fall under me lah. So if you have so for example, if you stay in KL or something, better you contact the dealer near you lah. It's not that I don't want, but sometimes it might be easier for you to liaise with them lah. Okay guys, so thank you everything. So alright, thank you guys. So if anything, you guys can take this picture and contact. If you want to contact me, also can, no worries. Okay, thank you guys.